We have with us Suneeta Reddy, the MD at Apollo Hospitals, joining in on the show. Would like to know how their earnings have panned out and what their quarterly performance has been. Remember, this has really been a darling of the markets as well, Apollo Hospitals, with a revenue uptick of 16.5%, although profit downtick. Let's try and understand which way the mood for Apollo Hospitals is headed. Suneeta, great to have you on the show. I'm just looking at your ARPOB, which has seen a healthy jump, in the first quarter. What's not translated fully to EBITDA margins, though. So, a two-part question, really. First, tell us what's led to the growth, and secondly, why the slip in margins?
So, the ARPOB has grown by 11%. To 57,340. This is due to a shift in our payer mix, which has been increasingly healthy. Currently, there has been a 10% growth in volumes, but in the payer mix of insurance and retail now comprises 80% of our business, and we have seen 20% growth in this payer mix, and this is really what has contributed to our POB. Beyond that, if you look at case mix, we have now 63% of our work coming from the Congo specialties, surgical work, which is coming from the Congo specialties, which is cardiac, onco, neuro, a lot of surgical work, which has led in part to the drop of 30 basis points in EBITDA margin. So going forward, I think we have absorbed the costs of the new doctors and new surgeons that we've onboarded. In fact, we've onboarded 100 of them. So we have absorbed the costs, and I think with increasing asset utilization, volume, and revenue, we should be able to cover this, and margins will improve.
Overall occupancy across the group was at 62%. While you guided to a 70% mark, will you continue to stick to that, and would you get close to that number?
So what will get us close is, I think the first quarter was a very challenging quarter in terms of, being a holiday season. I think that number one, but also travel was very restricted to the entire Chennai cluster because of rail and air issues. And I think it was partially muted because of that. Plus this whole thing of holidays and people going on leave. But going forward, we're seeing a very healthy July. So I'm optimistic that we should touch around 67 to 68%.
So you're saying that you're reducing the 70% guidance now. Could we assume that it'll be around 67, 68% then?
No, we're getting close to 70. I think, we have internal targets of 70, but I'm quite sure we will definitely be in that region of 70.
Right. So I want to talk about your healthcare platform as well, right? HealthCo. You guided for about 45 to 50 odd crore rupees reduction in costs in the first half. The PAT break even in the fourth quarter. How close are we to achieving these targets?
So there was a 6 crore reduction in cost. I think more importantly, what they've done is to reduce the discount. So that has worked out very well, because if you look at the EBITDA, it was just negative by 53 crores versus 72 crores in the trailing quarter. So they are bringing it down, and in the fourth quarter, they will be EBITDA neutral, which I think, for any omni-channel, this is definitely the fastest growing, which will be EBITDA neutral in this third year.
Can we see a pharmacy segment and how can we see the pharmacy segment grow in Q2, and what are the plans on investment and store expansion there?
I think we did a huge addition last year where we added 1,000 pharmacies. We will add about 400 pharmacies this year. And what we will see is the revenue and EBITDA coming from the offline stores because of the pharmacy addition. So currently, revenues in Apollo HealthCo grew by a healthy 22%. And this trend will continue and accelerate because of the investment that we made last year in pharmacies.
Right, and you say that this quarter you've taken a judicious decision to lower your discounts in pharmacy. Will you stick to this going ahead as well? And how are you looking at the GMV levels?
So certainly, you will see that there will not be deep discounting. The team will look at market and they will be very rational. They'll be very careful on how they plan discounts. But GMV of 3,000 crores is something that we're on target for.
Right. Any update on the plans regarding the fundraise in HealthCo? By when can we see this happening?
Like I said earlier, there was absolutely no urgency. Considering the state of the markets and the valuation we deserve, I think there was a time to be cautious about taking in new money. But we do have access to external capital, and maybe in the third quarter, if required, you will see some transaction.
There has been a drop in EBITDA of Apollo Health and Lifestyle. Can you help us understand that why that has happened and how can we expect the margin profile going forward?
So the good thing about Apollo Health and Lifestyle is that diagnostics is on track for 100 crores per quarter with a good 10 to 15% margin. The drop in EBITDA and in profit is a one time because of it's a one time cost, and I think next quarter they're on track for much better performance.
And the growth in your international revenues, what is the kind of growth that you're expecting from the current levels?
Currently it's at 5%, moving to 8% by the end of the year.
Okay, great to have you today on the show, Suneeta. Thanks for highlighting how the earnings have been. Just